Okay, so the US stock market is not looking too good right now. Are we in a crash? And are there any opportunities where you can make money right now? That's what we're going to get into in this video. Alright, so the first question is, are we in a stock market crash? Let's look at the Nasdaq chart. And alright, so if we look at the past month or so, we're down 10% in the Nasdaq, which is what they call a correction. So this is basically like a step below a crash. A crash is usually like 40%, 50% drop in the stock market. But so far we've only been down 10%. So there's a lot of reasons. So in the past month in the Nasdaq, we're down about 10% from the all-time highs. It was at 14,000, over 14,000 at one point, and now we're at about 12,600. So that's a big pullback. A lot of people are losing money. A lot of startups and growth stocks are, suffering the most. A lot of SPACs that became public late last year that saw big rises early on have pulled back a big amount, and investors have been losing a lot of money. But if we look at the 1 year chart on the Nasdaq, despite the 10% pullback, the Nasdaq is still up over 58%. So it hasn't given back most of its gains yet. If we look at the S&P 500 index, year to date, it's still up 3%, even though it's pulled back from its all-time high in early February. And if we look at the Dow is up 5% year to date, and it's actually nearing its all-time high right now. It seems like it's on pace to break its record pretty soon. So to say that we're in a market crash right now would be incorrect. Stocks are definitely pulling back right now, but they're not in what you'd call a crash. Nothing like the 2008 crash or the crash that we saw last March at the beginning of the pandemic. So what's going on with the market? So the reason for the pullback in the Nasdaq is for a couple of reasons. So right now we're seeing a lot of panic selling, a lot of fears of inflation / interest rates rising, and a lot of these companies just grew a lot. Like they grew a lot in 2020. They had big returns. A lot of them doubled, tripled in price, and people are just profit taking or cutting back on their positions. So as interest rates rise, naturally it becomes more expensive for banks to take out loans, which means that when they give out loans to their consumers, clients, or whatever, they have to charge them higher interest rates to take out those loans. So what this forces companies to do is to spend less on investing projects, on growth. And this is what has investors worried right now. They're worried that a lot of these growth companies, because those are the ones getting hit right now, are going to suffer setbacks in the future as interest rates go up. This is causing a big sell-off in growth companies, tech companies, which are heavily concentrated in the Nasdaq. This is why we aren't really seeing a big sell-off in the Dow and the S&P, because those companies are, for the most part, well established. They have earnings, they have strong balance sheets, and they won't really be affected by high interest rates. The companies that will be affected by high interest rates are these up-and-coming companies, like your Ubers, your Lyft, DoorDash, Airbnb, Tesla, a lot of the other startup EV companies, the battery charging companies. These are the companies that will be most affected by high interest rates because, like we said, it's going to be a lot more expensive for them. Does this mean that a lot of the growth companies in the Nasdaq are bad? No, not really. What it means is that investors are starting to outweigh some of the costs and benefits of being in the stock. So yes, a lot of these companies have a lot of promise. They are working on, like we said, the renewable energy companies, the electric vehicle companies. These are industries that are going to be very profitable in the future. They just haven't proved anything yet. So like anything, guys, people are going to start outweighing the cons, the pros and cons. So the pros, as we said, big growth, the industries of the future. But the cons is they just haven't done enough yet. They still have to grow. How do a lot of companies grow? They take out loans. They have to borrow money in order to build new factories, to expand, and all those type of things. So investors are seeing interest rates go up, fear of inflation go up. So they're now realizing, it's going to be a lot harder for these new growth companies to actually expand and become profitable. So what this means is that investors just have to be more selective in the stocks that they choose, definitely be a lot wiser, look at the management team, get to see their results. Are they performing well right now? Or are they a company with high debt, low earnings, that's always a recipe for disaster. So what should you do? Well, guys, I think this is a good time to invest in companies that you truly believe in. So, like I said, a lot of companies are shit. Like, straight up, a lot of these companies are shit. A lot of them will probably fade away in the next few years, but at the same time, there are some good ones out there. So, some of the positions that I've been adding to during this pullback the past few weeks, I actually added to 3. I bought Airbnb for the first time, I bought Palantir for the first time, and I bought Apple. So these are 3 companies that I believe will be well positioned in the future, and that's just my take. I'm thinking about investing in the Ark Innovation Fund because, that's basically what I'm telling you guys about right now, about how there's going to be innovative companies in the future that will perform well. And I want to be a shareholder of that for when they do rise in price. And right now, actually, the Ark Innovation Fund, if we look at their chart, they are actually down for the year. So year to date, they are down about 11.5%. So it's a nice pullback. Most of it has come in the past 2 weeks. And for the year, like the past year since last March, they're still up over 100%. They're up 130%, and in the past 5 years, they're up over 500%. So I believe in Cathie Wood. You've probably seen her in the Wall Street Bet forums and all the Reddit forums. She's very popular for a reason. It's because, as I said, her innovation fund has been doing well, but she is picking very good stocks that are positioned to do well in the future. So this is a good way to diversify into innovation. Let's say you're a new investor and you're seeing this pullback and you're kind of just like, okay, the stock market seems very risky. It seems very volatile right now. One of the things you can do is invest in an ETF. It's positions. She posts them online all the time on her, and she publishes her holdings online. So some of her biggest holdings in her innovation fund are Tesla, Square, Roku, Zillow, Spotify, Shopify, Zoom. She is investing in some of the best companies that are positioned to be very successful in the future. But at least in the short term, it's going to be very tricky trying to find good companies to invest in. And you really have to just filter them out. Just because a stock went up 200% in 2020 does not mean it's going to go up 200% again in 2021. They have to show earnings. This is where the fundamentals come in. And that's why I preach fundamentals. If you look at my videos on the fundamentals of a company, rather than the technicals of a company, for the reason being, you have to invest off fundamentals. Fundamentals are basically the earnings of a company. Is the management good? Is their product wanted? And is their product going to be used in the future? And these are the things you have to look at, not really, the up and down movements of a price. Because if it's a good company and they earn a lot of money, eventually it's going to go up. It might trade sideways for a few months, but eventually the stock is going to go up. So finally, guys, if you found this helpful, don't forget to like this video, subscribe to this channel, and always do your due diligence before you invest in stocks. Try to invest for the long term. Invest in companies that you truly feel confident in. If you are making a trade, try to keep it short term. If it goes down, cut your losses early, and if it goes up, take profits before they disappear. With all that being said, I'll see you guys in the next video.